returns in a significant way, and especially can take advantage of when you have the rough years in the marketplace that you get every once in a while. And people, they don't just happen every 30 years. They happen a couple of times a decade, and we want to be able to make money on both sides. And what I try to do is look at key turning points, not just in individual stocks, because I guess the point is that fundamentals are very important on the long-term basis, but the fundamentals aren't always right. I mean, I am a strategist at Miller Tabak. Tomorrow, if you're on tomorrow morning, I'll be on. I was on CNBC yesterday. I'll be on Bloomberg TV tomorrow morning at 5:30 a.m. for those who are going to be on. What I try to do is combine all these things, because the market is not always right. Despite what you hear some people say, the market's always right. The market is only right eventually. I mean, all the time, many times that they screw up at what's really going on in the fundamentals, number one. And what I try to use as a former trader, not as, most strategists are, sector analysts or economists, and they kind of look at the theoretical stuff that's going on in the marketplace, not, what should happen. I look at what is happening, because when you work on a trading desk, you really learn. I did it for 25 years for Salomon Brothers and Merrill Lynch, 15 years at Salomon Brothers during the time that was the most important trading desk on Wall Street in the 80s. Well, it was in the 70s, 80s, and 90s. I was there in the 80s and 90s for 15 years. And then 10 years at Merrill Lynch, also one of the most important trading desks, and probably the biggest. Is still probably the biggest. And I covered the biggest. I covered the trading desks of the biggest institutions in the world. What are the biggest? Mutual funds, the biggest hedge funds. I mean, the very biggest. I mean, BlackRock, the hedge fund, Fidelity, and mutual funds, banks, insurance companies, et cetera. And you really learn not just what should happen, but what is happening and what's going to happen. So I really spent a lot of time on all these areas, and that's what's able to help us make the difference. And the other big thing, of course, is that we now have the tools to trade these things, where in the past only institutions were able to do it. But now we have weekly options. We have 3 times a week options in the index ETFs. We have inverse ETFs. We have leveraged ETFs, et cetera. And many of them are very, very liquid. It allows us to take advantage of these things, where in the old days, you can only buy things that were, options that were out many months in advance, and you had to pay big time premiums, and they weren't as liquid and everything else. And it's worked out really well for us. And that's what we want to keep on doing in this incredibly volatile marketplace.
Right. So let's go ahead, Matt. And well, I think, okay. So by the way, we just activated the chat on the Zoom call. So we're going to be going over a couple topics here with Matt. I think you can share your screen there. Do you see the button there, Matt?
Got it. Bang. Bang. There we go. I'm on the wrong thing. There we go. There's my Bloomberg. But that's what let's put up here today, where we made a lot of money here today. And then, well, I'll show you the TQQQ is really where we made a lot of money today. Hold on a second. Equity GIP. Okay, we made a negative bet late yesterday and then doubled down on it. The TQQQ, which is the leveraged ETF for the QQQ, which is the NASDAQ 100 index, you can see 193 million shares traded in this thing today. So it is a very liquid instrument. Don't have to worry about it's not some obscure thing. But look at it. See down here? It was down 16% today. 16%. When you own options in a product that moves 16% in a given day, you're going to do very, very well. And we were up, way more than doubled our money, and we still hold some of those positions, and we did some other things we'll talk about as the day goes. So
this was how long were you in this trade? How long were you?
Well, let's just show you here. Let me pull up this because I made a whoops. Let's see here. Okay, there we go. I want to go. Oops, no thanks. I don't know what that is. Okay. Oops. Hold on just one second. Let's take a second here. Okay, here we go. Here we are. So I'm just going to blow this up. This is how long we bought this yesterday. We bought this at 10 o'clock in the morning. The TQQ, and again, whenever we give on the chat room, whenever I give it a trade, I give you a very specific trade. I don't just come in and say, hey, the QQQs look like they're going to go down. Let's buy puts, or let's buy TQQQ puts. I give specific trades. In this case, you get the specific TQQ. So you give the symbol, what asset, what stock we're looking to buy, the expiration date, September 16th, which is Friday. Of course, the strike price, $30, and of course, whether it's a put or a call. So the whole thing, we bought these, okay, at about 10 o'clock, about 10:30 yesterday. Then at the very end of the day, we added to them at about the same price, literally right here at 16 o'clock, which is military terminology, that's 4 o'clock. And sure enough, we came in today at midday and sold them for a 250% increase in basically 14 hours. And it was funny because later in the day we added, when the market, you can see it started to come down, the TQQ, this is the option, started to come down, the market bounced back a little bit. We made the profit. We went back in this trade, and we actually bought some different price puts. But now those are already up about 30. Well, I have to look, and I'll pull them back up in a second. But I mean, this is a trade we made in just a very short time frame. Another trade we made just this week, and again, it shows that we can make it in many different things. Here's the UUP. This is the dollar. Everybody's bullish on the dollar. All the fundamentals told us the dollar is going to do really well. Well, guess what? On the 7th of this month, we bought the UUP, which is the dollar ETF, the September 23rd, $29 puts. Okay, we bought them with 2 weeks to go. So sure enough, we sold them midday yesterday with 100% gain. Okay, so we doubled our money. And again, this was in a 4 days, so that's more of a swing trade, 4 days. Some of our trades are just a few hours, some are several days, and some go out many weeks. But these are the types of things that we're doing, and this is what we did in just the day. Like I said, and these puts we bought yesterday, in less than 24 hours, we made more than 3 times our money.
For those that don't know, right? I mean, I've been following Matt here for about maybe 2 years, right, on this stuff. And basically, I can tell you that Matt made a new record, but before that, that's the Benzinga record, to be clear, the Benzinga record on the highest percentage trade alert win, like recorded and everything, where it is on the chat room, which was the FXI trade. Again, for those that don't know, really, Matt provides currently, right, at Miller Tabak, provides research, institutional research out there for their clients. You guys, as retail traders, you can trade with Matt basically on that day-to-day, week-to-week, month-to-month, and take advantage of that. Also, we'll talk about a meeting that Matt has after this, but Matt broke the record, got this one, and guess who had the record before that? It was Matt Maley. So this is the chat room. Look, because of the way that Matt uses options, this is the only place that you're going to get these kind of results like these thousands of percent. And it's not every day, but I mean, Matt can tell you a little more about that.
Yeah, what we did here, I mean, again, talk about it. I showed you how I did that we do it in several different ways. We make the money, whether it be trading an option on advanced micro devices or Apple Computer or Amazon, whatever. But we also do it on ETFs, which I just showed you with the TQQQ. But we also do it in other markets. The TLT, we had the TLT ETF, which is the Treasury bond ETF. We've made some nice money just in trading it today. Worked out very nicely. The HYG, which is a high yield bond ETF. Wheat, believe it or not, with a wheat ETF, we made some real nice money. And these are times where we're making, more than 100%, sometimes 200, 300, 500%. Certainly not every trade. And every once in a while, we get the real big ones. And this was the one we did. This was in a foreign stock trade. So another different market. This was the FXI. Now it says last weekend's chart. That's because I made the chart back in March, not now. So it wasn't last weekend's chart. But the FXI, and what we did is we looked at more than just the fundamentals. The fundamentals stunk, and I was negative on China all the way down. It just made a series of lower highs, lower lows. It acted like crap, and so I remained negative. But then here, late in the decline, early in the first quarter. In the first quarter of this year. The real what hit the fan, because the SEC came in and said we're going to we might delist a bunch of these Chinese companies, and it just fell out of bed. So the Chinese market was getting crushed. So I took again, even though the fundamentals were not good, I knew the market was becoming oversold. So I looked at the the technical aspect of it, and then we looked at the RSI chart, relative strength index. And this one, you see how it gets down to 7, it gets down to 30. It tells you a stock, or in this case, an index. The whole Chinese market was getting oversold. It gets down to 30. It's a green line. Go ahead, buy. Green, go ahead, buy. When it gets up to 70, it's a red line. Stop. Don't buy up here. It's getting overbought. Stop buying. But you can see every time it got down here to a low level, the market bounced. See it happen here. Even though it was in this horrible decline, this was a good reading. It's a nice little bounce there. We got here. You see it here. It's a nice bounce here, a nice bounce. But look at this one. This one got ridiculously oversold. The most oversold ever. I went back as far back as I could go, and it was, and it was the most oversold ever. And it's the second most oversold that I've ever seen for anything. Not only that, experience told me that the Chinese were going to go in and buy their market. That's what they can and do without impunity, with impunity, I should say. They could just buy it. They don't care if everybody knows they're manipulating the market. They didn't want to see their market crash for obvious reasons. In China, they didn't want to be a loose face. So sure enough, I came in. I said, let's buy the calls. And the next day, we saw a huge rally where the whole market rallied 27% in one day. Okay, and so you can see how this RSI really took off. Well, on the day, on the 15th, on the 15th, when the market was really flat on its back, I came in and we said, let's buy the FXI, which is the Chinese large cap ETF, the March 18th. It was on the 15th that we bought them, but the expiration date was the March 18th expiration, the $30 call options. And sure enough, we bought them about 3 o'clock on the 15th. On the 16th, as I showed you, the market was bouncing 27%. We came in and the market, these options opened up 1,000%. So you made more than 10 times your money. But I was like, nope, usually you're up 10 times your money. I mean, yeah. Are you kidding me? And, basically an hour and 3 minutes of trading, even though it was 12 hours in time, it was an hour and 3 minutes of trading. They're up 1,000%. I was like, usually I'd say, let's take our profits and move on. This is a huge home run. But I knew from experience that China would keep buying their market. It wasn't one of those meme stocks that would rally that much and then fall right back down within 10 minutes. I knew they'd support it. So we held on until about 11 o'clock. But finally, they got up 3,000%. I said, geez, I think it's going higher, but we can't take, we got to take some off the table. So we sold half of it at 3,000, just under 3,000%. Rode them until the rest of the end of the day. Finally, at the very end of the day, it was up almost 8,000%. And I said, okay, that's, I think it can go a lot higher from here, but we can't, we can't let a gift horse in the mouth, look a gift horse in the mouth. We sold the other half, had over 5,000% gain. Some people in the chat room held on, made as much as 10,000, and one person even said they made as much as 14,000%, which, if you waited a couple of days, was certainly possible. So we did. I admit that's not what I made. We only made 5,000%, but 60 times your money. I mean, that's that's pretty good. So that was again, we had something like this the previous year when we did. It was actually a little different chat room, but it was a different product. But in Viacom, where it was one of those meme stocks that became ridiculously overbought. So I came in, the RSI got up to 97. Remember, I said 70 is a sell signal. It got to 97. I said, let's buy the puts. Sure enough, we made 5,000. Same thing. It was up 2,500%. We sold half of it the next day and sold the other half up 5%, 5,000%. Some people held on to as much as 10,000%. So again, I don't want to try to claim that this is something we do every day or even every month, but it's something we have been able to do a couple of times in the last year or 2 years. And like I said, and I'll show you some other trades where we've made 600% or 400% when they see these big moves. And that's really when you get to make the big money, because that's what we're looking to do. And right. People talk, it's just too much going on, too much volatility, and you just want to sit back and watch it happen. That's fine. And 10 years from now, you'll say, "Geez, I'm glad I just held on," while the rest of us are making money. We don't make money on every trade by any stretch of imagination, but we're up big this year, and it's working really well.
And the thing there, Matt, is that the way I look at it is that if I'm going to be right, we're going to be right. We want to be as profitable, max profit as possible if we're right on the move, right? Because if you're buying or day trading just the stock, you're making pennies on the stuff, right? But if you're doing it with options, then you can time it. And that's the thing. People ask, well, how can you find the perfect timing? Well, 40 years doing this in the business definitely helps, right, Matt?
Right. And it don't perfectly time anything. I mean, just look at it. If I had perfectly timed that FXI trade, I would have waited and sold all of it up 8,000%. But I mean,
because it went up the day after,
even that, it would have been up 10,000%. But it's like I said, if you want to get the exact bottom and the exact top, you'll drive yourself nuts. So don't worry about that. But if you're making, let's say we made 250% today. We actually got very close to the top of the day. We got very close to the bottom when we bought it. Yes, I'm sorry. It was the very, very close to the bottom on the put option. So it was the very close to the high in the market and very close to the midday low. And it actually did go lower, but we went back in at a better price. We let the market go rally back a little bit. And then as it started rolling over again, we didn't get the exact top of the midday top. In other words, we didn't buy, we sold them in here. The market rallied. Those puts became cheaper. We went right back in, not at the exact top, but a cheaper level than we had sold them. And then they rolled them, and then they went down even further. Sorry, the market went down further, and our options rally even more. So that 250% is actually more like 350% now. So it's but we're still holding on to them. So I don't want to take credit for a profit we haven't logged in or locked in. I'm sorry, locked in.
Right. And just really briefly, Matt, I know you have a session with the members on Tuesday. That's a lot of it. There's a lot of education. Look, the trades are killer, right? They're amazing. But then you also do education, and you do some of that during the sessions, right? Besides the market commentaries and the conversations you have with the chat members, right?
Right. I mean, we do this thing on Tuesdays. We did it today. Actually, today was a little earlier. I had a London financial news network in London wanted to interview me at 12:15. Usually at 12:15. Usually we do this trade. I'm sorry, we do this Zoom call 11:30 on Tuesdays, and it goes about. Initially we thought, geez, we'll just do this for 20 minutes, maybe half an hour, and it'll go fine. But it's grown into an hour long, and people seem to have liked it. And if there's ever a time where there's just not much to say, I'm not going to drag it out for an hour just to hear myself talk. I mean, you don't want to waste your time or mine, But with the volatility now, we've been able to fill the hour without any problems. And then today I moved it to 11 o'clock because I knew the market was having a big day. And instead of saying, hey, I've got to do an interview at 12:15, so I'm going to cut my subscribe, cut the people in the chat room short. No, we switched it to 11 o'clock and still had the full hour. And of course, this what better day to do it a little earlier than it was today because the market was really moving. And the reason why we do it on Tuesdays, Mondays, people are trying to make their feel their way into the week. And if we wait till Thursday or Friday, the week's already done. I mean, let's get in early in the week. We get it, about midday on Tuesday. It has worked out very, 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 very well. But again, as Rodrigo said, it's not just giving ideas. So today, as a matter of fact, we talked about another chart that I like to look at is the MACD chart. I just told you about the RSI, but somebody asked, can you go over the details of what a MACD chart is? This is something I had done in the past, but there were new people in the chat, so I wanted to make sure that they had it too. And what I used was, I'll just use the QQQ, which is again that the ETF for the NASDAQ 100. And I use the NASDAQ 100 because that is by far the most liquid of the NASDAQ things. And it's the one, it's got the 100 biggest names in the NASDAQ, and it's got all those tech names. And like I said, it's the most liquid. But we look at a MACD chart and we talk about, what is that? What is that? Why is that important? And oops. Okay, let me just pull it up here. Why is that important? And again, we went through a little tutorial, and let me pull it up here again. Whoops, because I'm going to go to the weekly. This is what we talked about. See how this weekly tutorial, now again, I don't want to get too much into it because I know there's a lot you guys want to ask, but what it is, it tells you what's going on in terms of momentum. It doesn't give you a top or a bottom like the RSI chart can, or stochastics can, but it's just like it's much like the death cross and the golden cross. When the death cross is when the 50-day moving average crosses below the 200-day moving average, and the golden cross is when the 50-day average moving average crosses above the 200-day. Well, in this case, it's a shorter term play, but it's the 12-day and the 26-day. Whenever the 12-day crosses below, that's a negative cross, and above, it's a positive cross. Here we do it on the weekly chart. You can see how the weekly chart, the last time we had a negative cross, we're starting to get close to it. it was the market got hit hard. See out here, this is actually about a 10% move. Here, this was a head fake. You got to be careful. That's why we always got to be careful head fakes. But you can see that see this big decline here. So this is the type of stuff we were talking about in today's call. So we could have a tutorial. We talk about what it be. And we talk about correlations and what's important, what correlations are really strong. A lot of people think that the dollar and the stock market are highly correlated. They're actually not very correlated. And so you can see these odd moves. So again, we're trying to teach people, not just, hey, here's some great ideas, boom, buy them. But why them? Why are you buying them, Matt? I mean, we want to learn. And so we work together in this team. And I'm not the only one with the ideas in here, but I just try to bring about my experience on a macro basis, on an individual stock basis, on the technicals, the fundamentals, et cetera, so people can learn how to trade, not just sit there blindly and follow my lead. Because believe me, a lot of other people in the chat room give a lot of great ideas. I'm not the only one giving them.
Right. No, absolutely, Matt. So, so these are some of the trades and everything. And some of the folks have questions about the live trading rooms and all that stuff. So I'm going to be posting that in the chat room. But Matt, give us a little bit of a market overview. Obviously, you take advantage of these trades on a daily basis, weekly basis. But what do you think right now over the Fed, specifically interest rates, and where all this would be going?
Well, I mean, one of the things that I've been, the reasons why we've been so right this year, I mean, again, I just can't believe how bad. I mean, a lot of these people on Wall Street are now claiming, oh, geez, just like I said back in, no, they weren't. Most of them, not all of them, but certainly Mike Wilson at Morgan Stanley. He's been spot on, or pretty much spot on. Nobody's perfectly, and certainly not in my mind. But I was very, very bearish, pounding the table at the end of last year. We got to get short. We got to buy puts because I saw what was happening. All these other people, oh, don't worry about the Fed. Somehow the Fed didn't matter anymore. The don't fight the Fed doesn't matter anymore. Well, we went full force in it. Right now, we're still in the same situation. These people keep trying to wish that the Fed is not going to do what they say they're going to do. They say, look how they pivoted back in 2018. Well, they pivoted because they had to. The stock market, I'm sorry, the bond market was freezing up. They had no choice but to pivot. They didn't care about the stock market. I don't care what anybody tells you that the Fed pivoted because the stock market went down in late 2018. It's wrong. In the middle of December in 2008, in December of 2018, just before they pivoted, they raised rates and they said, we're going to continue to raise rates. It wasn't until the bond market, the fixed incomes markets started freezing up, which freezes up the entire system. You can't, you can live with a bear market in stocks. You can live with a bear market in the bond market. You can live with a crash in the stock market. You can't live with a crash in the bond market because that means freeze up. Banks can't trade with one another. That's a no-no. And that's what happened in 2018. So what they're trying to do now is they've told us. And the other thing too is that people keep saying, well, they keep changing their mind. No, they don't. Remember last year, they told us, they gave us 6-8 months warning that they were going to start. But they started last summer saying, hey, we're probably going to start cutting, not just taper back on our QE program. We're going to start raising rates. Nobody wanted to believe him. And I was okay, fine. I understand the market kept going up. But at the end of the year in December of this past year, they said, okay, we're going to do this. And these are the dates we're going to start doing it. Nobody wanted to believe him. We did. They did telegraph it. They did say what they were going to do. They didn't change on a dime. They spent the whole year of 2021 setting it up. And then finally, when they moved, nobody believed them and the market killed. Same thing happened this summer. They've been spending weeks saying, weeks and weeks saying that they're going to be very, very hawkish, and nobody wanted to believe them. The stock rallied, and look what's happened. So the last thing, I'm kind of rambling on here. I don't want to get off the focus here, but the key thing to note is the Fed is fighting two battles right now. They're not just fighting inflation. Okay, today we heard inflation is going to be worse than expected, or worse than people thought it would be. And people, it was funny. I saw what was going on in the market. Saw people were buying calls yesterday. People were expecting that, oh gosh, gasoline's come down so much, it's going to be a real good day. No, and what we did, well, again, I'll go back to that in a second. But the point is, what the Fed is doing, they are fighting inflation. Okay, because of what inflation is much worse than it would have otherwise been because of the war with Ukraine. They have to fight that. They have to keep raising rates. The other thing, though, however, is that they also have to get the stock market back in balance with the economy. During that massive QE program in 2020, they pushed it up. Everybody knew in the summer of 2020 that the stock market was way ahead of the fundamentals. Nobody questioned that. And they said, okay, it's okay. They're manipulating the market because we got to get through this pandemic. And when they do, everything will catch up and we'll be fine. The problem is the Fed kept the liquidity too long past the emergency was going. So instead of catching, it started to catch up and then it just kept going up because it couldn't play catch up. And at the beginning of this year, the end of last year, we had 22 times earnings, 3 times book sales, book value off the chart, et cetera. This market, it was way too expensive. So even if we didn't have inflation, they were going to have to tighten policy. Now they have to tighten it more than usual, because not only do they have to get that's one thing the Feds keep saying nowadays, the last couple of weeks, we need to get things back in balance. That's their way of telling you it ain't just inflation. We know the stock market. We know that the interest rates are too low for where the economy is, okay? And the stock market's too high, as we can see by the valuations, which are still high. Price to sales, they've come down a lot. Guess what? They're still above where they were at the top of the tech bubble. Okay, so it's still ridiculously expensive. And you can fudge around, with earnings. You cannot do it with sales. Sales are sales. You can't, we had to charge offs and stuff, and you can make your earnings look much better than they are. Your sales are your sales. That's your numbers. Boom. Unless you're completely lying, you're complete fraud. Those are your numbers. You can't fake them. The market's still expensive. So we have to price this in. Therefore, we're going to have. There's a reason they use these terms. That more pain involved. There's a reason they keep telling terms. We got to rebalance the economy. So this is something that I think is going to keep volatility high for quite some time.
Right. And Brian from the chat says, I'm interested in joining to capture's Matt advice on purchase calls and puts. So as a trader basically first time trader. So this is basically, again, this most simple type of options trade that you can make, right? Buying a call, buying a put, and all they have to do is follow your trades. If you put the expiration date, strike price, you put everything for them, all they have to do is follow your trade, basically, right?
Right, that's right. And the key thing to note is that, but at the same time, I still tell you why I did the trade. I just say, okay, I'm buying calls and Apple right here. See ya. No, say, well, this is why. And frequently I say, hey, I'm looking at the Apple calls. I think this is good. This is why I like it, but I'm waiting for this. And then when it happens, then you got an idea of why I'm doing it. And then why I've timed it for that way, and you can learn. But yes, the whole thing, and what we do is, a big part of what we try to do is not only education, but risk management as well. Today we made some money in some of these calls. I'm sorry, in these puts. And I said, I think the market's going lower, but we're up so much, we got to take at least some off the table. We got to take some profits. You can't just, because the options can move around. Obviously they're highly risk things. So we really try to focus on risk management. But also, it's like we always say, is I almost never bet. I say almost never, but I don't very often do I bet more than 10% of my portfolio, my trading portfolio, on any play. These people said, they go, geez, I had $100,000, I lost $80,000. I was like, on one trade, how could you do that? Boy, if you're really sure about something, that's great. But as soon as you're down 10,000, get out of it. It's not working. Get the heck out of it. But the bad thing is I focus on risk management, and we get small. I tell you, hey, this is going to be small. This is going to be medium. This could be large. But very rarely would I go more than 10% on any one play and any one option. And we can, but because you make 200 or 300% on a lot of these big trades, you can really, people trying to make the big home run in one big trade, say, great, I did one trade and I retired. That's great, but that's not going to happen very often. So kind of lost my track there. But the point is that we talk about individual trades. We try to keep them where they're manageable. And when people are new, they're not losing their shirts. And you're going to lose money on some trades. The greatest traders in the world lose money on their trades every year. Every year they lose some money on some of their trades. The whole idea is to let your winners ride and really make big money on those. And then of course have your winners a lot more frequent than your losers. but you are going to have some. It's just a matter of the way the markets work. And but you also can start with paper trades. Some people literally just, when we say paper trade, you just write down a piece of paper. Geez, Matt bought the QQQ puts today, and I'm going to buy them too. And I'm just going to write it down now, and I'm going to follow it for a while, and so I can feel like I'm really getting involved. Then when you get in, you get in with a small amount of money. I'll never forget, we had early on, somebody asked, geez, I've got X amount of dollars. Should I put it all in this trade? I was like, whoa, no, time out. Just ease your way in. That's how you learn. And the problem is the people who lose a lot on the first trade, they're actually not the ones who get hurt. It's the ones who make a lot of money on the first trade. And then they think, I can do this every time. And then they bet even more, and they lose their shirt. So ease into it, and with our help. And the thing is, people, there's no such thing in our chat room. We have so many great people in it. It's a great family. Asking questions, no such thing as a dumb question. Ask questions all the time. People are not just me, but people are more than happy to help out and say, hey, listen, for instance, people have come in and said, hey, I'm on Robinhood, and I can't get the VIX options. How do I do that? And I'm like, geez, I've never been on Robinhood, so I don't know. So I said, can somebody else answer that question? Boom, they're right in. Yeah, this is what you do. Look at this. And people are very, very helpful and asking for advice. And I'm not the only one giving it. People are more than happy to give their advice. Right. Show when they agree and disagree, and we do it in a congenial and professional way, and we all learn.
Right. So let's say I remember when we started this chat room about a year ago. Now, since the chat room has started, right, those particular trades, yes, it's a 7-day money back guarantee, Caroline. So yeah, since the chat room has started, Matt, what has been the performance there, like percentage wise increase since you started the chat room?
After today, it's even higher. So it's been, we're up over 500%. I mean, it's
and you're never going all in on these trades again. Never. There's no.
Right. No, again, when we some high, we had a little bit, every once in a while, you'll really go kind of with a bigger trade, and that'll really, and suddenly you make, oh my gosh, you're going, you make 10%, you put 10% of your portfolio, and suddenly it's up 400%. Mm-hmm. That can do real well. I mean, again, you can't make those things happen. You can't say, well, geez, nothing's happening, because the setup's not there. We don't just act to act. There are times when people say, hey, there's not much going on in the chat room today. And I'll be like, because there's not much going on in the market. Especially there was a few days, not as many as you'd think, as we usually get in August, but there were several days where there was not much going on. I'm like, I'm at 1 or 2 trades and maybe no trades. We're not going to do it. You can't make the market do it. You see what the market's doing and take advantage of what's going on. Maybe there are big guys who think they can move, and I guess maybe they can actually move the market. Well, not many individuals can do that. I don't think there's any individuals who can do that. Because the ones who made that much money would never try to do that, move the entire market. But maybe they can manipulate things because they're multi-billionaires. But we're just in there trying to take advantage of what the market's given us.
Okay, and I'm getting a ton of emails and questions here from the viewers, so I'm going to go through this really quick. We'll get back to the session, folks. Again, thank you for sending these. So, quick one here from Phil. Does Matt Maley go over trade ideas from the chat members? Yes, it's a conversation. You go. It's a 3-way street, you, Matt, the members back and such. So yeah, the traders have their own trades like Matt was saying earlier. Next one, are the sessions on Tuesdays recorded? Yes, they are recorded. So all the chat members will have access to that. It's about a 1-hour session, 11:30 till 12:30. It started for 10, 15-minute thing. It evolved into a much bigger thing now. Thanks to Matt's willingness to be there in the chat room. Then next question we have from Eli. What is the chat room schedule? Good one. That's Monday to Friday, Eli. It's Monday to Friday, 9 to 5 p.m. And, in several locations, if there's events, right, market events, Matt will be given insight right before if you're waiting for a specific number or print to come out, right?
Yeah, I mean, obviously today with that CPI number, we were all over just right after 8:30.
Yeah, no, today was a great day. I mean, at the chat room, honestly. Then we have next question. Is there a money back guarantee? Yes, there is a 7-day money back guarantee, and the price at renewal is going to be the same, the same as now, which is 70% off. But I want to tell you guys a quick funny story right now that just happened. I don't know if you noticed, I had to get up from my table really quick. We're in the cannabis conference, and we have like Mike Tyson as one of the speakers. He's talking doing a panel, and I'm in a room here in the hotel, right in the hotel that we're doing the conference, and they just brought in Mike Tyson here, like to this room, like in front of me. And at first they opened the door and I see him and I'm like, oh, damn, like, like, should I get up or what? So, like in the middle of this webinar. And it's like, no, okay, just chill there, do the session. So, but yeah, there's something crazy that just happened. That's why, but yeah, really quick. So those are some of the questions. If there's any other questions, put them in the chat. But Matt, any other insight you want to give on the chat room before we, move on here to the market discussion?
No, yeah. The thing is what again we try to do is it be more than just. Well, that's another thing. We don't have 10,000, 20,000 people in this chat room who are trying to do a bait and switch. Again, I'm not in any of those other chat rooms. But you hear about these people where it's some hedge fund guy and they bought a big position in XYZ and they start spreading rumors in the chat room and push the stock up and then pump and dump. They pump it up and then sell it to you while all the guys are up. And that's basically, that's a big part of what happened to those meme stocks. Although they did legitimately squeeze some shorts, but there was no fundamental thing going on there. We're trying to make what's really going on in the market. I'm not trying to fool anybody and trick anybody into doing something. And when I do a trade, I do the trade. So you know what I'm doing. So I'm not buying it and then waiting a half an hour, hopefully it goes up, and then tell you to buy it so it goes up even more and I can sell it. That's just not what we do. So that's a great part of it. But the other part is that, again, people are throwing ideas in there all the time. Hey, I look at this and I'll say, hey, I agree with that, or I don't agree with that. I mean, we had these Amazon calls. Oh, what a dope I was. The people came in, one woman came in and she's like, the Amazon, whatever they split, the stock, usually takes off. And I said, okay. I looked at the charts, I looked at what she was talking about, I look at these, and I said, you're absolutely right. This is a good play, but for some reason I didn't like it. I don't know why I didn't like the trade. And I go, but go ahead and buy it. Well, she did, and it's just quite a few members in the chat room. They're up 2,500%. I got bupkis. I got the big goose egg. But those are the types of things that people are talking about. But there are other times I come in and say, I don't like this. It doesn't mean you can't do it. People should trade, obviously trade on their own. I give a bunch of ideas, and other people will give it their ideas. But there are people today who didn't wait until I sold. They sold a little bit earlier. They made a little less money. Now there are times though when they sell a little bit earlier and they make more money because I missed it. I should have sold it here and it came down a little bit. So I'm not trying to say, oh, if you don't follow me, you'll make less money. There are people who make more money sometimes on the trades when we get involved. But the point is that we all work together. We're talking about the whole thing is that we want to know why people are doing stuff. And that's how you learn. That's how you become your own trader. If you're a young person, you want to be doing this for the next 30 years, you want to know why you're doing it. And you'll be able to change with the marketplace. That's one of the things why I'm still here. That's why CNBC still wants to have me on to see what's going on. Morgan Brennan, who's one of the anchors on CNBC. She's been out for maternity leave, and she sent me an email today, said, I'm coming back next week. I'd love to chat just to, help catch up. I mean, she wouldn't be calling me to ask me if she didn't, I'm not the only person she's calling, I'm sure. But because I've been able to keep current and competent, is the old saying on Wall Street, stay current and competent. Well, if you're in and you know what's going on, that's how you do it. And that's what I've been able to do. And that's what I like to help people do. I love teaching. And one thing I know for darn sure, I don't have all the answers. And I learn something every day, and hopefully people are learning something every day from me. And we're getting a lot of good ideas, and we're using the tools that are available to us. Like I said, these weekly options and stuff that we couldn't use in the past, at least individual traders couldn't use. The institutional guys good because they could do over-the-counter trades. The over-the-counter trades are expensive to put together. So the institution, the brokers would only do it for big trades. And it's like, oh, you're going to spend, even if you want to spend $2 or $3 million, that wasn't big enough. That was oh, you want to do a $50 million trade? Okay. Or a $100 million trade? Okay, we'll do over the counter trade. So you just couldn't do it. Now we can, not only are available, but in most cases, they're very, very liquid. And the biggest thing I guess I'd like to say, the last thing is just the comment, and we've had, believe me, we've had some tough trades that didn't go well for us. But the key thing that we're all keep saying to each other, don't trade alone. If you're trading alone, it's just very, very, very difficult. You miss so many things. You miss opportunities. You miss times to take profits, to limit your losses. Hey, you take a loss. It's like, okay, do I get out now? Yeah, let's just take the loss and get out. Boom. It's helpful, especially doing with a group of people who are good at what they do, smart at what they do, and with people who are willing to admit they aren't up to speed as maybe others, and they're just willing to learn. They're there to learn, and it works out really well.
Right, and I want to give a big shout out here to Skull Guy, most recent Stock Picks Inner Circle chat room member. Big warm welcome. Let's go.
Skull Guy, I gotta like that. You gotta like that, Skull Guy. It's I think you'll really love it. Tomorrow's going to be another interesting day. We get the PPI number, which is the Producer Price Index. So inflation numbers will be out tomorrow, and my guess is that market will probably bounce back a little bit tomorrow. Let me go a step back. I just want to say one thing that we did yesterday. We knew this PPI, this CPI number, this Consumer Price Index number was coming out this morning. So, and I just felt the market, I felt the market had kind of moved up in anticipation that would be a good number. So I wanted to buy some puts. However, what we did, again, we do just basically puts and calls, but every once in a while we'll do what's either a straddle or a strangle. And what that is that we bet that this would be an individual stock or the market overall, like we thought this one would be. And we see it's going to see a big move. And what you do is you go in and you buy a put and a call, okay, with the same strike price, the same expiration date, and the same stock, and you're betting that's going to see a big move. So if you lose money in this one, you're going to make a lot more money in that one. And what they have, that's a straddle. They have a strangle where it's slightly different strike prices, but still the same stock, same expiration date. And so we'll do that every once in a while. And that's what I did. It's like, hey, this is going to be a big number. The market's going to see a big move one way or the other. Let's go in. So sure enough, we made way more than we did on the, and because I was leaning towards the bearish side, we definitely made the bearish bet a bigger one. And so we made a lot more money. And then of course, in the morning, when the market opened down, I was like, no, this thing's going a lot lower. And we added to it and made way more money than we lost on the calls that we had bought. So, again, we use some smart strategy, but this is not, I'm not in there doing, these condor trades and these big spread. I mean, there are people in the chat room who do it. And once in a while they'll say, hey, I'm going to do a spread trade. But for the purposes of this chat room, I'm a trader, a stock trader by my background of 25 years of trading stocks before I became a strategist, and wasn't trading options as much. So I'm looking at the turning points and just buying simple puts and calls. Once in a while, we do a straddle or a strangle, but that's pretty much what we do here. And again, like I said, people come in and say, hey, I'm going to do a call spread here. I'm going to do a condor here. That's great. I'm not saying don't do it. I'm just saying that's not what we try to do. My expertise and where the talents I've had over the years is key turning points, whether they be key long-term turning points, like when I made the call when nobody else was making it in October of 2020, pounding the table bullish on oil, and everybody else thought I was a moron. And sure enough, Morgan Stanley, Goldman Sachs, they all turned bullish 4 months later at the beginning of 2021. At the end of the year, they said, hey, look how smart we are. Our stocks are up 50%. Our stocks are up 120%. Forget about it. No options, just up at 120% because I saw what was going on in the market. Hey, it's great when you're playing that middle. That's what most of Wall Street does. Most of them are paid to be bullish, and they're not paid to take chances on key turning points. That's what I've been good at doing for most of my career. And again, sometimes it's long-term turning points, like we did with the energy stocks, or in many cases, it's like key turning points like we saw this week, where we can really capture those short-term plays and bolster our long-term portfolio to to really, again, maximize our returns. In my total portfolio this year, that includes all that long-term stuff. Okay. My portfolio was up 80, whatever. No, let me say, I'm sorry. I'm up 40%. So in other words, I mean, a bunch of stocks in my long-term. Well, I said I actually went to mostly cash. I'll be perfectly honest with you. So I went to I did have a lot of cash at the beginning of the year, and I'm sitting on that because I know we're going to have this unbelievable opportunity when this thing finally washes out to jump in and buy unbelievable companies. And you're not going to have to buy some startup company for $1.50 because you're going to be able to buy the best companies in the world at really low prices. And like I said, the trading part of the portfolio was up several 100%. The total portfolio was way up when everybody else is down.
Right, Matt. So another thing really important for the folks to know, right? Especially if you're a new trader, it's very likely you have no idea, but like if you're watching, as an example, CNBC or Bloomberg, you would be living in a different world, in a different reality, right? They've been talking about the CPI cooling off for months. And I mean, Matt, like, I understand these people are doing their job. They're reading off a teleprompter. That's fine. Here at Benzinga, you know how it is here. Everybody knows how we do things here. And I mean, how do you really try to explain that to a new trader that really just doesn't understand really the whole concept of like the difference between our chat room and something like just watching, the whole day Bloomberg or CNBC, right?
Yeah, I mean, there are a lot of good people on those, especially the people who work for these companies. I mean, some of them are, the reporters, the ones who are asking the questions, they're very good, and they're asking the right questions. They have some people who work for them who are not really reporters; they're more analysts, and they're entertaining and stuff, but they're kind of paid to be bullish. I mean, that's kind of what they're doing. And I don't say those specifically, those people, but a lot of people they have on, their guests that they have on who come on are paid to be bullish. I mean, they work for a brokerage firm, and it's like, hey, they're not being completely unethical or anything. The market over a long period of time does tend to go higher. That's what I mean. If you bought stocks in 1920 and you sold them in 1960, you made some nice money. The problem is they had the Great Depression in the middle. I'm not saying we're headed towards that or anything like that. But my point is that so they are telling you the right thing. Yeah, just go for the long term, and that's fine. But and that's why you should hold. I mean, if you own an Apple computer, don't sell it. Hold on to that. Believe me, it's going to go a lot higher. I think it's going to go lower on a near-term basis. So if you want to add to it, I'd hold off. But don't sell your Apple computer. So I really think that's
What about Tesla? Do you think Tesla's a stock that you could just buy, hold, keep adding long term? There's a lot of fans. Because here's the thing, he can do a lot of things with those satellites, Matt, like cell phone stuff. Like he's just getting started.
I'm a big fan. I mean, I think if you own it, you hold on to it. But I do think because it is still important stock in the marketplace, like it is with Apple Computer, I think it's going to come down. So I wouldn't be adding in a big way here. You just look at the chart, see how it keeps getting above. See that purple line there? That's the 200-day moving average. Why everybody looks at the 200-day moving average? It's not exactly a full year. About 220 days is the average number of trading days in a year. But it's the closest round number to it. So they use 200-day moving average, and it's been you can see how it's been a very good one for people to follow over the years, and you can see how it's gotten right above it, that purple every time, and then it keeps failing. If the overall market comes down like I think it's going to, and for the reasons I've talked about, this stock will probably come back in. So I think you'll have a better entry point down the road, and he's got to get this Twitter thing behind him. And that's going to take some time too. But again, he's people talk about the competition, and they're so far ahead of everybody else. I mean, I remember there was a time not that long ago, a year ago, where really smart people were saying this stock is going to go to zero, and they're not saying that anymore. So I guess my point is, yes, you can buy it. It's one of those things. If you want to buy a little bit here, you want to buy a little bit right now, fine. Want to buy a little bit every month over the next 6 months to a year, fine. But I'm not backing up the truck right here, because I think, again, if the market goes down, Tesla's got to go down. I mean, I don't care how good their long-term prospects are, because there's so much money in index funds and things like that they'll they'll sell it and it goes down. And that's okay. That presents opportunities. That's what you want. That's because you have forced selling, margin calls, and all this stuff. And people are saying, I don't care how cheap the stock is, I got to sell it. But if we got cash on the sidelines, we've made profits while the market's going down, we're going to be the ones not only that have the money to buy it, but have the confidence to buy it when everybody else is panicking.
Matt, do you think Tesla's going to go at 200? I mean, what kind of numbers are you talking about here?
I think it's possible. I think it could get back down to its lows. Yes, I think the overall market will. I think the market's going to test its 2022 lows before it bounces back. In fact, I think there's a chance it will undercut it.
Right. And since we are talking about, Apple and Tesla and, these blue chips out there, it's very important to know, yes, you're providing, the day-to-day, week-to-week trade analysis, commentary, feedback, teaching, education, all that stuff. But then I know that there's several members that, for example, they do that here and there, but they also ask you a lot of questions because, well, I guess your background as an analyst and just being in Wall Street for 40 years, stocks like, hey, Matt, what's a good company with, good operating margins, good cash flow from operations that I could buy and hold for 10 years for my kids' college fund or things like that, a little bit more on those type of investors, if you will, right? You also cater to that, correct?
Absolutely. And one of the things that's funny because it's not working well right now. Well, it's okay because I've said all along that this is one that you want to buy every month for the next year, and it's Intel. And it's not. There are better companies. The better company. Intel used to be one of the 2 or 3 best and most important technology companies, and certainly the most important semiconductor stock in the business. But that's been a while. And see, look at the stock. It keeps going down. And I'm like, I'm okay with that. I'm not backing up. First of all, as I said, I'm not going to put 25% of my portfolio in Intel. What I am doing, though, starting here, you buy it every month, a little bit here, a little bit here, now a little bit here. At some point the next year, it's going to bottom, but it's going to take off. And it's going, well, wait a minute. If it's not the best company, why would I buy that? Because Intel is the only semiconductor company who's making new chips. And they are, because they're the only one who have the capacity to do it. Advanced Micro Devices might be a better company. They're not big enough to do that. With what's going on with Taiwan and China, if Taiwan is completely dominant in the in chips. In chips, we get 25% of our chips from there. We do not manufacture it. Nobody manufactures in any kind of size. Intel's the only one that's going to be able to do it. The government knows this. The government is helping them build the new factory, or they call it the fab. When this thing turns, they are not too big to fail. They're too important not to succeed. Okay, so it's a little bit different, but it's the government's going to give them contracts. They're going to tell all the Northrop and all the Boeing and all these people say, hey, yeah, great, use Intel chips. We need them to succeed because we need their chips to be the best chips, and we need them to sell well because we need to be able to create our own chips. Intel is too important not to succeed. It is going to succeed. There will be other stocks that do better. But here's one that, and people, oh, geez, it's down. I'm like, I'm okay with that because I'm not backing up the truck. I'm not buying the options on it. I'm just buying a little bit here, a little bit here, a little bit here. And by this time next year, I'm going to have a nice little thing and my average price. And then when it goes back up, I'll still be buying it. And my average price will be down at whatever, will be at 30. And the stock will be back up at 40. And I'll be like on home run, and it's going to keep going higher. And 5 years from now, I'm going to say, oh my God, I'm so glad I bought that stock. Not that I put 100% of my money into it, but these are the types of things that we do talk about. It's not just the short-term trades where you can make 200% in 24 hours. What do you like long-term? Dividend plays right now are good plays. And for longer term, some people are asking me today, do you buy it for the dividend and then sell it? That's people use that. It doesn't work as well as a lot of people think it does. But when you buy a good dividend paying stock, you're paid to wait. And during a tough market, and that's always helpful.
Right. No, that makes sense. Now, this whole, chat room has evolved into something that's more than just trading education. But also, Matt, there are specific events, right, that you trade around, like specific Fed meetings, earnings. I know there's, I think it was Tiffany who made like 4,000% shorting Ross like a while ago. It's right. You see the members. they're like mini Matt Maleys, right? So basically, it's really cool how they're able to help each other out. Good to see this chat room, do so well. Anything specific about any specific stock maybe that you want to discuss or sector?
Well, I just want to say before we do that, and is because I'm going to talk about, I've showed you a couple of trades we did, but I want to show you that the trades that we've been, it's a consistent thing. It's not just, okay, we make 100% on this one, 200% on that one, and then we do nothing for 3 months. And then we do, it's been, some months have been better than others, but recently it's been really, really good. The spring was really, really good. When I turned bullish in June for saying we'd see a multi-week rally, but the rally lasted longer than I thought it would. There's no question. People still made some nice returns, but it wasn't as good, and we had some losses. No question, we had some weeks where we actually lost money. That's going to happen. And again, if you think you're going to make money every day, in every trade, you shouldn't be trading, because that's not going to happen. Again, the most successful guys in the world will all tell you that. But I do want to show you just so we have these. So you give you an idea that we do it fairly on a very regular basis. Here, let me just get down to this, and this was good. Okay, now I showed you the UUP. Let me pull it up so you can see it better. The whole thing. I showed this to you earlier. The UUP and the going the wrong way. And the September, the options that we just sold today. Okay. And, so what we did though, just last week, remember we talked about the, we made some real nice money in the puts, right? Well, guess what? A week ago, we made the TQQ September 9th, which expired last Friday, 27.5 calls, 166%. Again, same thing. We bought them late in the day, sold them on the opening the next day, 166%. Bang. Oops, I went the wrong way again. Sorry. Energy, XLE. Okay, well, I talked about this. Again, this was the reason behind it. See how this, again, went back to that MACD chart that we were talking about. The MACD chart took place. Even though I had been really bullish on the energy stocks for a long time, I turned cautious on the group. Okay, at the beginning of June, sure enough, the group sold off hard, and we made nice money in the puts. Did the same thing last week, where we made over 200% buying the XLE. That's the energy ETF. Okay, we bought the puts in that one. LABU. Now there's a different sector. This is again earlier in the month, and then I'm going back into August now. LABU was is the 3 times leveraged biotech ETF. Now here again was getting oversold. We saw the oversold and overhated. We saw the sentiment factors. We saw the technical factors. It became oversold at 3 o'clock one day. We bought it, and the next day it was up 850%. Okay, now I didn't get the exact low. If I had waited a little bit longer, I would have gotten a little bit better. If I had waited and sold them a little bit later, but man, if you're going to get mad at yourself or mad at me for getting an 850% return in one day, again, if you get both the exact top and the exact bottom, that's just lucky. Again, every great trader will tell you that. All those big hedge fund guys, you take it and you're like, thank you very much, pat yourself on the back and move on. Okay. And again, we did in July, we bought the calls. Again, remember the market was rallying. Same thing. This was an intraday trade. We don't do too many. We don't try to get too many of those. But again, I didn't get the exact low. We're up 133% in 3 hours. Okay. July 15th, $26 calls, all on the Thursday, July 14th. Whoops, keep doing that. I'm sorry. TLT. This is again, something we did in July where we bought, this is the bond market. We actually made, I have to look at my portfolio, but we made some nice money in the TLT calls. This is the Treasury ETF. Again, told you the exact stock, the exact strike price. This was a 3-day trade. We bought it, we made 284%. That's almost 4 times your money. Remember, if you're up 100%, you double your money. If you're up 200%, you haven't twice your money. You made 3 times your money, 400%, so et cetera. Almost 400%. I'm sorry, almost 4 times our money in that one. So, and again, why do I keep doing that? Wheat, I told you earlier, I had the wheat options. This is the wheat ETF. I won't kill you with these, I'll give you more, but I just want to show how that we're doing. But we bought wheat. Wheat had become ridiculously oversold after they sold off. So we went in for the ETF on wheat. No, we're not going to go in and try to get futures accounts and start trying to trade wheat futures. So we went into the ETF. Again, we have the tools. The old days, you'd have to go and call a commodities trader and try to get this done. Instead, we bought the WEAT, the wheat ETF, July 15, $9 calls, 250% in 3 days. Okay, didn't get the exact low, didn't get the exact top, but boy, we sure made a real nice trade there. And XLE, remember I talked about in June where we made money 186% in late that month. And earlier in the month, look what we made earlier in the month. At the beginning of the month, we were buying the put options where we sold half of it at a 470% thing over 4 days, and the other half up 560%. Believe it or not, we actually made the 560% on the first half. And then I was like, oh no, this is starting to go down. I got to get out of the rest of it. So we still made over 500% on the total trade. But again, we're going, I can go back and back and back, June, these are in June, individual stocks, advanced micro devices, 146%. This is the Amazon trade that I did not get involved in. And this is what other people made 15. I think I said 2,500%, but they made at least 1,500%. So I misquoted that and this was the Viacom trade that I was talking about. So I got off on a tangent there, but I just wanted to show the consistency. Again, you don't make them every day where you're making twice your money on every single trade, but we do it on a regular basis, several times a month, several times a week in many cases, and pretty much every month we've had many trades each month that way. And I just wanted to make sure that people didn't just say, I happen to get lucky today and therefore it's a one-off thing, and every other trade is going to be a
right. No, because I mean everybody can get lucky here and there, but I mean once you start doing it consistently, and I mean 40 years, quite some time on your belt. I know the majority, I mean including myself, haven't even been alive that long. Now the fact that you're able to actually provide not only the trade ideas but also the thinking and the rationale behind it. It's not just hey, buy this, sell this. It's like this is what's happening. This is why this is going on. Right. And it becomes an experience, a learning experience that you can make money on, which is the beauty of the market, right?
Yeah. And one of the really amazing things, Rodrigo, is that somehow I have 40 years of experience, even though I'm only 35 years old. I'm not sure how I've been able to pull that off, but don't I look 35? Okay, maybe I'm not 35 years old. But anyway, the real issue is that again we just try to look at the markets differently. When I first started doing this, I thought, well, geez, we're going to call it beyond the fundamentals, but that just does a little too quirky there. But the point is, we do have to look beyond the fundamentals when you're trading. And I mean, I'll give you a great example of what we did in the spring, where we made a real nice money. Gosh, I'll go back and find the trade, but we made over 500% or at least over 400% in Apple calls. And the reason why I bought that was that back in the spring, remember when the cryptocurrencies were all crashing and people were getting margin calls and these cryptocurrencies were getting crushed. Now the stock market was getting hit too, but Apple Computer was down 10%. And I'm like, well, what the hell is going on with the Apple Computer? There's no new news out. I mean, I could see why the market's down, why this would be down 4 or 5% because the whole market's down, and just people are getting concerned. But then it hit me. I was like, I'd say this is just what happened back in my career with long-term capital management back in the late 1990s, and it was a big hedge fund that had to liquidate, and they had all these esoteric bonds. They had these margin calls. There were no bids for these bonds. They couldn't meet their margin calls. They couldn't raise the money. So they sold what they could sell. They owned a boatload of General Electric stock. They were just selling it. Sell. I don't care where. Sell it. And back then, GE was one of the most important companies and most liquid stocks in the world. And so I was looking at it going, that's what's happening with Apple right now. These guys, I kept hearing about how people couldn't meet their margin calls because a lot of, even Bitcoin and Ethereum, they couldn't raise enough money. Just think about Dogecoin and some of these other really small ones. There's no way they can sell enough of these cryptocurrencies. What are they selling? They're selling what they own. Well, I knew damn well if they're buying Bitcoin, they're not buying General Motors or General Electric. They're buying Apple Computer, Microsoft. And sure enough, that's the reason Apple was down. So I knew as soon as the forced selling and the liquidation was done and those margin calls were over in the cryptocurrency market, I knew Apple would rally. And sure enough, we went in, we bought them. It was funny because as soon as I saw the cryptocurrencies bounce just for one day, Apple kept going down because people were still afraid of it. I said, this is the day we're going to go in. And in one day, we made over 400% buying the Apple calls. We're thinking, again, the term think outside the box, it's used all the time. Get people, I think outside the box. It's the last thing you want to say in a like in a job interview. Go and tell them, because every idiot says that, right? But we really do it. And we're looking at different markets all the time, whether it be the FXI. I show you wheat. I show you TLT, the Treasury bond market. I didn't show you, but we've made some nice money in the HYG, high yield ETFs. But we've also made it in NVIDIA, Apple, Advanced Micro Devices, Amazon. And it's not just the big cap names either. I mean, people are making money trading Pfizer all the time. I mean, there's a lot of different names. I say Pfizer is a big cap name, but it's not one of those sexy names that you think. Because everybody thinks they've got to buy a big, either a small or some sort of a tech name, because otherwise they don't see the big moves. They do, and especially when you're they all have these weekly options, you can still make a lot of money trading them. And instead of trying to find some obscure stock that nobody's ever heard of, and you happen to pick the one of the 100 that does hit that home run, that's great. But we can make that money in real stocks with liquid name. I mean, real companies been around a long time. I don't want to say real stocks. Those other stocks are real stocks. They're just not as well known, and you don't have to find that obscure name. Great, we all want to buy Microsoft or Apple when nobody had ever heard of it, but you can still make the money trading the way we do in an active way and an intelligent way. And again, we're trying to look beyond the fundamentals. We're looking at the edge, where we can get an edge when things have been mispriced, and it happens all the time. And when the market is as volatile as it is right now. People say in 2021, I made so much money because everything was going straight up. All these didn't matter, meme stock, whatever. Well, that they think that's the only time you can make money. We can make just as much money now, and we are. Well, I mean, it's just as much money. I mean, some meme stocks, of course, they went up, 300% a day.
Really quick here, Matt.
You do very, very well.
Really quick here, Matt. Want to give a shout out to our newest family members here, Kaf He, JF. Banderas, welcome to the family here. Let's go.
Yeah, great. Thanks for joining. And like I said, it's funny when you go into some of these things. When we make these calls, these webinars, and people say, "Well, he said this week's really going to be a big week." Well, it's like, well, he could say that every week, right? Just because he's trying to. No, every week has been a big week. And this is, I mean, with the PPI number, the producer price index, another inflation number coming out tomorrow. We have the Fed meeting coming up. We got the election coming up. We have what's going on in Ukraine. We have what's going on in Taiwan, what's going on in Iran. There's so many different things that are going on right now that is going to keep this liquidity, this volatility very high. And again, I'm glad I've been able to show the trades we made in both directions. And that's what you want to be able to do. Where last year, I mean, in 2021, yeah, everything was on the buy side. It was easy. This one's a little bit tougher, but if you play it correctly and play it with, and don't do it alone, you can really capture some. I mean, it's been a tough year for a lot of people, and it's been a real good year for us. And I think we're going to keep it going because I think this volatility is going to stay with us for the foreseeable future, especially with the Fed. The Fed, they're just starting QT. They're just starting to shrink their balance sheet. Oh my goodness, what's that going to do to the market? And I think that's going to create volatility. So it's a fascinating time in the stock market. You don't have to be that defensive person that, you said you had Mike Tyson, you have a plan always works until you get punched in the face or punched in the mouth, whatever. Well, we have a plan in place, but we are so nimble. We're bouncing around because we know that people are getting punched in the face, and we're ducking the punches, and we get tagged every once in a while. But we're playing it on, and not just saying, geez, some guy in a chat room with 10,000 people in it or 30,000 people in it told me I should buy the meme stock, and it worked. And you got a small number of people in here working with each other, trying to beat them. Trying to beat the market. You don't beat the market. We're just trying to take what the market gives us. And when the markets are volatile, they give you a lot. But you got to be nimble and be on both sides of the market, and be willing to trade in an active way.
I do want to make a quick announcement here. We are going to make a raffle. So out of everybody that joins, I've read about a couple of those names. We're going to be giving away 2 free tickets to our pretty much our upcoming event. We have an upcoming event. I think it's in New York. So it's going to be by the end of the year. We're going to raffle that ticket out for all the people that join Matt's chat room here. Maybe you get a chance to meet Mike. Who knows? But Matt, we've been here for quite some time here, man. I know that, you know, you're very courteous and grateful with your time. How are you doing with time right now?
Yeah, we could say we got about 6:15 here in the East. Maybe another 15 minutes. We can move on there. If people want to ask me about a couple of specific stocks, we can look at the chart or whatever, and then kind of wrap things up.
Okay. All right, folks. So really quick before we get into Matt's live, Q&A stock analysis with you guys, make sure that if you do want to join, this is going to expire at midnight, the link, make sure that you click it before midnight. We are giving away, I forgot to say this, we're giving away a free laptop. Everybody that joins will get hooked up with a free laptop. So make sure that you use that link. And if you have questions, you can email me, call me. I'm going to be putting the contact there. Now, let's go ahead with some questions there. Let's see what's up?
No, while people are putting some questions in there that Rodrigo can read to me, I just want to say, this whole thing with the 7-day money back guarantee. I mean, the whole idea, I can't say I guarantee it's going to pay for itself in the next 7 days, but the whole idea is that the money that you put up for this it pays for itself. I mean, that's what we're trying to do. And I think a lot of the people in the chat room will tell you that that's what has been done for them. I mean, as I mentioned, and I think Rocco, we can tell you, was at 405, I think it was 404 today, where there was a person who literally said today they made their portfolio increased 50% today. Now, again, it was a small, I don't know the person's specific portfolio. They said it was a small one. So it wasn't like they, had 100 grand in there and it made 50 grand and then, whatever, it made 50 grand today with a really big trade. But the point is that our idea is to try to make sure that everybody, this pays for itself. And, if you don't like it after, 7 days and you won't necessarily pay for itself in the next 7 days, although with the volatility out there, I think there's a good chance you can, but at least you get an idea. It's like, hey, this thing is going to pay for itself and many times over. So that's really what we're trying to do. But again, you have any questions of specific stocks you want to look at or overall questions on the broad market? Be more than happy to answer them. But we can pull up some of these charts on.
Right. Okay. So we already went over Tesla. So we have Bizera asking an interesting question. Do you think the market will bounce due to the midterm election? Do you think it's going to make the market bounce?
Something, I think we will get a bounce at some point. I do not think it's going to be as much as people think. The people, the one thing about the midterm election is that people don't, first of all, yeah, we get some bounce, but there's been plenty of times that the market didn't act all that well in the midterm election in the months leading up to it. Number one. Number two, we have to remember is that even though they won't admit it, the president, the administration cares way less about the midterm elections than they do about their own election. And the people say, "What are you talking about?" It's like it's not a coincidence that the president in power loses seats almost every time. I mean, it's amazing. Almost every time in the midterm election. Why? Because they're willing to give it up. They know they have to do that because when they come in with a new program, they get elected. They try to use the momentum they have. They pass programs, but they back end load everything. They back end load it. Okay, and they sit there and go, well, but they could get more done if they had both the House and the Senate. Yeah, but it just doesn't work it doesn't work well. It's very, very hard. You can't keep the economy spanning in blockbuster all 4 years. One guy tried to do it, Donald Trump. He front end loaded everything, and look what happened. Now, obviously, there was other issues involved, the pandemic and his personality, whatever. But the point is it happens every single time. They back end load all their stuff. So even though they make it this, that, or this kind of deal, that we pass it's going to be a great deal. But guess what? Most of it kicks in the second half. So the economy can be doing better at the second half of their the last 2 years of their term, and the market goes higher. Even though he's going to work hard to keep gasoline prices down to help it, he cares way more about the next term because that's when they could get stuff passed. They know that even if, no matter how well they do in the midterms, it's going to be very, very difficult for them to get stuff passed. They're going to be starting to run for the next election and let the economy and let the programs they fit in do well. There's a reason there's a presidential election cycle. It's not just by coincidence. It happens because the They, you know, the first year they're like, hey, we can make some tough decisions. We don't care. Second year, we don't care. We're going to pass all those things. And then the third and fourth year is when those things that we pass kick in. The economy's doing better. I get reelected, and that's the main reason why the vast majority of guys who get elected get reelected. Trump or Biden may not be able to run. I don't know. He's, you know, whatever. He's an old guy, but if he can't win, he'll want the Democrat to win. So he'll be fighting hard for that. So I'm less concerned about that.
Yeah. So let's say, I mean, let's just say they, you know, like, I mean, printing all this money is definitely not helping, right? The situation, but it seems to be the go-to solution for some reason, right?
But that's the problem, is that they well, the thing is, my standard theme is that the Fed knows they just can't do it forever. I mean, remember that they did it. They said they have to shrink their balance sheet so that when we have another crisis, they can increase it again. And they can't just keep increasing it beyond infinity. Everything will blow up. You can only issue so much debt, okay? And they think, well, but I've been hearing that for 40 years. Well, at some point it does get, and they understand this. The Fed is not stupid. A lot of people try to call them stupid. They know it's capitalism. There are recessions. There are bear markets. Let's go ahead and have one now so we don't have a much worse one 2 years from now. And if we just, so they're letting the market, they are forcing the market to go through this, and it is the right thing. It's actually the healthy thing. It's going to be painful for a while. And we can blame them for keeping the spigots open too long. Yes, okay, it shouldn't be as bad as it's going to be. It's going to be bad. It can be bad one way or the other. When you get on steroids, if you stay on steroids, it's going to kill you eventually. You have to come off them. The Fed knows that. They know that they had to have the steroids to save the system. Sometimes patients need steroids. It's not just guys who are trying to get big contracts in Major League Baseball. It's some people do need it, but when they do it, they have to come off it at some point. When they do the withdrawal method, the addiction, it's tough, but it's what they have to do. And over the long term, it's the best thing for them. The steroids were needed. They needed to get through the operation. Then they got recovery, and then they have to come off it. That can be tough if they spend too much time on it. That's what's really happening. This is we've become addicted to these steroids. The Fed is taking it off because they know it will kill the system if they don't do it. That's what we're doing. That's so important to understand right now. These people keep talking about, oh, the economy's doing that. It doesn't matter. They have to remove the steroids.
Yeah, no, definitely. I agree 100% there with you, Matt. So let's see. We have another member. I definitely want to thank Mary X4. Welcome to the family. Newest member of the Stock Picks chat room.
Great. Yep. Thanks, Mary. Looking forward to having you. We'll see you tomorrow in the chat room. And it could be another real exciting day. But it'll be interesting to see what happens after this big sell-off. The market usually bounces back, but boy, if you have any margin calls or something, tomorrow morning could be another interesting one. We'll just have to see what happens. But it's going to be a great, it's going to be, the next couple of weeks are going to continue to be very, very fascinating. And the thing is, it's like, oh, Matt, you're talking so bearishly here. It's like, yes, but as I said, this is normal and healthy. This is great. This is going to present the unbelievably great opportunity, whether it be 6 months from now, 8 months from now, a year from now, when everybody else is selling at the wrong time and panic. And then when the market bounces, and they're going to sell, oh, thank God it bounced, I'm going to sell. And so what we're going to do is like, no, the bottom is in finally, and we're going to be buying. We're not going to be selling those bounces. We're going to be buying and go all the way up. And it's going to be like 2009, 2010 all over again, or 2003, 2004. Everybody, from 2009 to 2012, money flowed out of the market it's not every month, but most months. It might have been every month. Most months, money flowed out because everybody was finally saying, oh, thank God, I can finally sell a little bit more. And they were doing the exact wrong thing. We're not going to be doing that. We're going to be buying on that next thing. So I'm not Mr. Perma Bear that says, hey, this is going to happen. We're going to zero and the market, we're all going to be guns and butter and we're all going to have to hide under rocks. That's not what I'm saying. I'm saying, let's take advantage of the situation. The Fed has got to pull away the steroids. That's okay. Let's take advantage of it so that when everybody else is selling, we're buying.
Right. Well, I mean, Matt, it's been amazing having you here, man. For those that just tuned in, we were talking about a bunch of options education there with Matt Maley, Chief Market Strategist at Miller Tabak. 40 years in Wall Street. A lot of you guys know him from CNBC, Bloomberg. He's there all the time. But I'll definitely have to tell you, Matt, really, I feel very grateful for you giving us the time here. I know that you give these big news places just a couple minutes. You give us hours and you're there in the chat room 9 to 5 the whole day. So big shout out to Matt Maley, the ultimate shout out of them all. Let's go, guys. Come on. Let's give it up for Matt. All right. All right. All right.
Great. So, thanks, Rodrigo. And thanks to those who are joining. I hope others will consider. And okay. It's going to be a wild time, and I'm really excited about it. And it's been a great year for us and a tough year for others. And I think it's going to continue to be a great year. And we can really take advantage of all this volatility because we have the tools and we have the team to do it. So we're really looking forward to it. And thanks again. And thanks, Rodrigo. And we'll see everybody in the chat room. Those who are there, Rodrigo, we'll see you there too.
Yeah, Matt, absolutely. And I'm just going to stick around here. I'm going to show them really quick the platform where you're posting your trades and the options, all that stuff. Yep.
Yeah, just one last thing before I go is that we do have two spots on the chat room. One is where we're going to the scrolling chat room all day long, but we have a separate page where I put the trades in. So so that you can see, if you've gone off and you're working, you're doing something for a couple hours, you come back, you don't have to scroll through hours of trades hours of hits to see what the trades were, and you can say, oh my gosh, this was 2 hours ago, can I still do it? So just to talk about that, I know you'll show them that, Rodrigo. Check it out. I think you'll find it really exciting, and all the best to everybody during these really volatile times.
Right, Matt, I'll see you in the chat room tomorrow.
Sounds great, buddy.
Okay, man. All right, sounds good. Thanks a lot. All right, folks. So for you guys that are here, you just witnessed Matt Maley, which is an amazing trader, educator. Basically, he does this the whole day, trading with the members. I'm going to show you a little bit of the trade alert so you see more or less how it is. So we have here, for example, this is from yesterday. He's like, for your information, I'll be on CNBC today. So basically, Matt is on the news a lot, like Bloomberg TV, all that sort of stuff. So he's posting like, hey, I'm going to be there if you guys want to check it out. But basically right here, you see he's going to sell half of his UUP September 23, $29 puts. They're up 100%. So I've covered my cost and now the rest will be gravy. So that's a trade alert. That's an exit, right? And Matt will post entries and exits for these trades. Again, all you have to do is follow. He'll tell you what to buy, what contract, and you have to pretty much follow what he's doing. It's that simple. So this is why this is very good for new traders. You don't have to come up with a new strategy. You don't have to reinvent the wheel or find a holy grail. All you have to do is follow somebody like Matt that's been doing it for 40 years back to back in Wall Street. It's his career. So that's where I would put my money in. If you want to get, let's say, for example, surgery, you don't want to get surgery from some rookie doctor that just got out of med school. You want to get, surgery from like a high level professional, doctor that's been around, right? So Matt Maley's been out there. I'm sure a lot of you guys already know. Sharon, that is a Bloomberg terminal. Matt has that, and he uses it to get insights on the markets and things like that, Sharon. But that's obviously not included. I think it's like $3,000 a month to get that terminal, $4,000. So he has that through Miller Tabak, which he is the chief market strategist there, and he provides institutional research for institutional clients, right? So you guys get all of this as well, but you get it in the form of a trade, right? So it's not like you're getting, a 50-page, 100-page report like his institutional clients do. You're getting the trade alerts, which is what you're here for, right? To make money out of the trades. Now, if you want to learn, you can also learn as well. A lot of people are there for education. Keep in mind, if you're going to learn, you got to learn from somebody that knows, right? There's a lot of fake, market gurus out there, a lot of people out there that, on everywhere, it happens all the time. So these are marketers. What I suggest is that you pretty much find someone with a legit background, legit experience like Matt Maley, and, rip it with him. He's there the whole day, Monday to Friday, 9 to 5, and the sessions on Tuesdays, 11:30 to 12:30. So I'll post a link here for you guys. And I'll put my email. If you have questions, reach out. It's definitely been a good session, folks. And right here, I'll be posting it in the chat on the YouTube side and the other side, but this is the chat room so you guys can see it. Entries, exits, there's 2 channels. The inner circle chat is where everybody's posting. And then Matt's important messages is where only Matt is posting. Entries and exits. So, folks, this has been a great session. Let me go ahead and put my email there before we do wrap this up. Matt Maley was amazing today with the stuff. And if you do want to trade with Matt, literally all you have to do is join the chat room and you could be there with him the whole day. Seriously, the whole day. It's not just, you know, stick or nothing. It's legitimately like the whole day, Monday to Friday, 9 to 5. So if nobody has any other questions, I think that we're pretty much, you know, good to go here. My contact's there. If anybody, you know, wants to go over any details or anything like that, someone's asking about a lifetime membership with Matt. You're gonna have to email me for that one, Kay. It's something that we don't typically do, so I'll have to see if it's possible. Make sure to email me, and I'll reach out to you. Email's always the best. Right now, I am in Chicago. I'm here for the cannabis conference. As you guys, I don't know if you guys were here when Mike Tyson walked in, and I kind of had to move my camera really quick because I didn't know he was going to use this table. But it's a great experience here. I'll tell you that. And that's kind of to show you guys really everything that Benzinga does. Benzinga does so much stuff. And really, you know, within the actual chat room, you're able to pretty much get the best of both worlds because you have, you know, the smart people, you know, like Matt Maley, right? And then you basically have your retail trading friends, right? And, you know, the people in the chat room, I consider some of those people like family. No, I'm just kidding. Everybody's family. Everybody's family. Deborah Connolly says, enjoy my hometown, Rodrigo. Let me know where to go. No kidding. I'm tied up here. I'll be here till the 15th. So just in case, know that, you know, I'm kind of working off this stuff, but the chat room is there. The chat room is there Monday to Friday, tomorrow. Obviously, I'm available. If you have a question, you can call me, email me. You know, the office is still open, all that stuff, right? So the other thing is that make sure you attend the sessions on Tuesdays, 11:30 to 12:30. There is a laptop for those that join. You will get a free laptop. Make sure that you fill out the form. It's going to be sent to you by email as soon as you sign up. So you just go in, put in the address that you want us to send the laptop to. And then the other thing that I'm going to say is that we have another cannabis conference. I think it's going to be in April next year. I don't know where it's going to be. It could be New York. I don't know. But, you know, we have Sean Kingston here, Mike Tyson, Rick Ross. I mean, they were literally walking here when they were here in the table. Literally, like, if I turn around this, like that's literally the door where they came in. So trust me, I didn't know if I was at the wrong table. That was quite a moment. I didn't know what to do, but you know, I got to keep the show going here, folks. So he's doing a panel here, basically. So folks, I think that kind of covers most of the stuff here with the Benzinga stuff. You have my email if you want to ask any questions or anything. You have the link there as well to join. Yes, this whole thing has been live. We do all this stuff live. I do all this stuff live. So there's no teleprompter. You can see there's no teleprompter. This is all, you know, improv, baby. Will there be a good person? Will this be good for a person that has never traded options or knows how to trade options? Yeah, absolutely. Joseph, I mean, because all you have to do is follow what Matt is doing. You know, he'll tell you exactly what to buy. You know, there's people out there that, you know, basically are just like, you know, I like this or this looks good. You know, very broad, like, you know, like it doesn't really help me. It just depends really where you're from. But if you're very new, right? If you're very new, then of course, right, you do want specifics. And then why those specifics? Why did you know, why are we buying at this level? Why are we going long instead of going on the short side, right? Like these are all questions that maybe you might not ask yourself, but you'll realize you'll learn stuff as you go because of what you're seeing in the chat room, the conversations back and forth. And there's a good guy there. There's a ton of good guys there actually, but I know David's really cool. He's been here for quite some time. I think there's definitely people that have been here for more since we started the chat room, but there's people that have been with Matt before because we have like other stuff with Matt. So Joseph, it's pretty easy, you know, for new people because all you have to do is look at the exact contract, you know, that he's buying and selling. I mean, you saw that most recent trade. He made like 100%. Not every trade's like that, but hey, the one from yesterday was. So, and you'll see everything is here. Everything is there. And this chat room is open the whole day, 24/7. And everything that is there, it's pretty much stays there, right? That's why we made it only so that Matt could post in that channel so that you can actually get, you know, the stuff a lot quicker and easier. Mm-hmm. Sharon, let me get your Lino Paredes. Let me check, Lino. Hold up. So yeah, I mean, sometimes, yeah, like if you're like, buying it from like out of the country or you don't, sometimes let's see. Lino, yeah, I did get that. I do have to give a shout out here, like where are my manners here? We have B Sergeant 69. All right. B Sergeant 69. Let's go, brother. Welcome to the family. Okay. Um, and Lino, so yeah, I mean, I would give them a call, right? Sometimes it happens like people that buy out of the country, like if you're buying from Europe or some other place, Finland, whatever. Sometimes your bank might need to like authorize stuff. So for anybody here that's from out of wherever, so yeah, sometimes that'll get you set up. And if you have any questions, again, I'll put the email here in case you have any issues. If anybody does have issues, let me post a link here. Hold up. Okay. All right. All right, folks. So I put the email there, rodrigo@benzinga.com. Send me an email. Let me know if you need any help. This is going to be available till midnight. If there's any other questions, you can always reach out. And that's it. That's it, guys. And somebody was asking about the lifetime. Make sure you email. Okay. Ram, can you send me an email about that? I mean, I don't know if it's possible, but if there's something that I can do to help you here, I definitely will. So send me an email so I can look at your account. It's really hard for me to answer questions if you remember, if I don't know, like what your account is, like what you have and all that stuff. So send me a quick email, Ramco, so that I can check it and we can see what we can do for you. Okay. Big shout out to you guys. Stay safe. Happy trading. It's been a pleasure being with you, hanging with you here in the beautiful city of, beautiful, Chicago here. So thank you, everybody. We'll see you next time. We'll see you in the chat room. Don't forget to fill out that form so you can get that laptop. Okay. It's automated. So you're going to get that email as soon as you purchase it. Okay. Ramco. All right, man. I'll send you some stuff there. Let's see. All right, folks, that does it here. Have a great day. We'll see you folks next time. Happy trading. Stay safe. you.